business, you could just type 000. So I just know where to start from, please. Did you get that? Okay, 111 for motivation. Okay, I got that. Okay, so please, I want to record. Okay, I think she's recording already. Okay, so my name is Dharey Adetunji, and to be sincere with you, my trading life has actually changed though, because I started as a novice. I started like last year, and I wasn't getting things right. I was making a lot of mistakes, making a lot of losses, and I lost a lot of money. Like I really lost a lot of money, huge amounts of money. I won't lie to you, and it wasn't easy for me to, actually stand this strong in the trading business and be able to, connect, predict markets perfectly and know what it's want to do. Okay. During my trading journey, I actually blew a lot of money. I blew money more than 300,000 naira. I won't lie to you. That was my life savings. That was all my investments, all I could, get. It was really, really very hard for me. I was depressed. I fought depression for a whole lot of time. I I was so feeling I was feeling so down, and it took the grace of God actually to get me back on feet and still keep on pushing. The first thing happened. The first thing, my mistake firstly was that I actually took forex trading as a get rich quick scheme, which I would want everyone not to do the same. Because when I came into the forex game, I was like, okay, I can just easily get a lot of money from this. I can just easily make a lot of money from this, make cool cash, and just, that was my mentality. That was what I was thinking. Do you understand? So going into it, I got to understand that it doesn't work that way. Do you understand? It takes it takes a lot of studying. It takes a lot of you know, time, full time, to get into that perfection level. Do you understand? So just because I was trying to rush things out, I got into a lot of losses. I made a lot of losses. I cried. I shed tears. I I shed a lot of tears. Yes, I'm going to analyze the chart, ma. I'm going to analyze the chart, ma. I'm just trying to, say some few things, ma. Okay, so first thing first, before we go into the chart, before we go into everything, I would just like to tell you that you have to fall in love. Like you have to really fall in love with the chart. You have to really fall in love with the market. And I okay. My life actually changed when Don Jazzy tweeted something about the forex billionaire. That's the queen of pips on Twitter. And I was like, wow, she actually knows about forex trading, and I'm actually having some back sets on it. So I tested her on Twitter, and she took me into the Master Trading Traders Institute. And ever since then, the training mentality and everything changed. I won't lie to you. So I started, I attended the classes she offered, line classes. I did everything I could. I started studying and everything, and I started building the confidence bit by bit. Now the confidence bit by bit, and later I got to a certain point that I feel I was relying too much on her. Now relying too much on her in the sense that if she doesn't drop a signal, I couldn't trade. Do you understand? And that was not the trader I wanted to be. That was not the trader I really view myself, to be in the nearest future. So I started, I started studying, taking time to analyze different charts, taking time to place trades on my demo account. Then I discovered sometimes that I was trading, but I wasn't emotionally ready to go into a full time trade. Now, don't get me wrong. Learning on demo, trading on demo is good. It's very very good. But there's this thing you have to learn. You have to learn what they call emotions. You have to learn how to handle your emotions, how to take trades, and and kill that emotions, because the trading market actually plays psychology with you. And I made a note about that because most of my project students, I discovered that they lack that the word they lack the word the lack that ability to handle their emotions. And if enough time is permitted tonight, I would like to talk about how to how to handle your psychology, and how to make a trading plan before actually going into full details. Because this is actually all what helped me to become a good a trader, actually, to become a trader, because I won't say I'm a good trader like that. So I would like to start. I would like to talk about psychology. Please, I would love to share my screen, and it's not allowing me share my screen, please. Please, is there a way you could
Okay,
help
yes,
me
I'm
with
going to
this one?
make you the host now. So, but hope let the recording continue. Okay, I'll make you host now.
Okay, okay, ma'am. Okay.
Okay, you're the host. You can take it up from here, Matthew.
Okay, all right. So, guys, sorry, there's this thing I discovered, and I really want to share with you guys because I feel, yes, um, every trading, there's this trading attitude I have to get rid of. Do you understand? I had to get rid of relying on people's signal. Do you understand? I had to get rid of, you know, I had to make sure I was able to make my own decision on every trade. Make sure I was able to, you know, have my own thoughts about each trade. Now, when I was during my time in the MTI, that was around last year. I told you I couldn't place a trade myself. It got to a point. It got so very bad that if the queen doesn't post a signal, I won't take trades. That is how bad it went. And I wasn't the kind of person that wants to rely on trades. I really want to go to the market, place my own trade, do my own things myself. I don't want to rely on people trade. I don't want to wait for signals before I could place trade. So I actually take my time and had to go out of the context of, had to study hard and deal with that emotions. And this was how I could, how I got balanced, and I would like to share that with you. So um sorry, I would like to show you how I actually get over that, because most of the people assigned to me under my project, they find it very difficult to place their own trades. I discovered that they find it very difficult to place their own trade. They actually rely on the queen, or they actually text me to give them signals, and they'll be like, I don't give signals, okay? I just want to help you, do these things yourself. I don't give signals at all. So when I was practicing, when I was backtesting last night, I was like, okay, let me share what I did that helped me. Let me share with you guys. Maybe you could actually take it into consideration, because I feel majority of the people in the group that doesn't talk actually have issues, just the way I did when I was starting. And if you don't mind, there's enough time for us to actually talk about our chat. So I would like to share this with you. So I would like to talk about the positive side of taking trades. Sorry. And likewise, I would like to talk about the negative side of taking trades. Sorry, I'm trying to. Then how you could get balance in every aspect. How you could get balance in every aspect of those. Because I believe at a point in time, everybody has actually gone through this particular stage in life, and you have actually faced it differently. But I really want to let you know that there is no trader that hasn't faced this phase before. Okay, I spoke with one of my project students assigned to me, and he was like, there was a time he was losing it, and he was trying to give up. And I was like, okay, bro, I've actually faced this thing before, and this was what I did. So I feel, okay, probably I should just share it tonight with you guys. So if you can actually get something from it. So now the positive side of trade, the positive side of each trade is what you get. What you get profit. Okay, you get profit. You see profit. How does this profit react to you? You know, you get happy that you're making profit. You get, you know, your mindset change. You feel like, okay, yeah, I'm in the game. Okay, I can do this. You understand? Then greed sets in. Now, when greed sets in, you start feeling okay. I really want to hold this trade to get so amount. Like this actually happened to me. Like I think last 3 or 4 months, I was on a trade. I was on a gold trade, XAUSD, and I was making $256 profit using just 0.15. I was making $256 profit, and I did not close it. Though it has hit my first TP, I left the trade, hoping it would get to like a $500 before I could close it. And I ended up taking a loss of $400. You won't believe, because I was so comfortable with the trade that I didn't use my stop loss. That was how comfortable I was with the trade, that I didn't use my stop loss. So I count it as a greed. Do you understand? And you get to a point, you start feeling unbeatable. You feel unbeatable. You feel the market can't beat you. You feel the market can't play you. You know the market's in and out, and you feel you are the boss already. Now, all these things happen on the positive side. Like when you're getting it, when your winning streak is very high. This is what you feel. Then next, you start feeling the excitement. Excitement start taking over the energy. You start sleeping well. You start, you feel, yeah, you start feeling happy. Now, all these things happen to you when you're getting it, when you are having your way with Forex. Now, let's talk about the negative side. Negative side is loss. You're scared of losses. You're scared of incurring loss. Now, I was talking to some people yesterday. I was like, okay, fine. I haven't taken a loss in a while. But it is part of the game. If tomorrow happens and I take a huge loss, I understand. That is how foreign streak without a loss. No, it doesn't happen that way. Enter a market with the mindset that you don't want to incur losses. That is very wrong. Then Forex is not for you. I won't lie to you. Forex is not for you. You have to go to every market with the fact that you're going in to incur a loss that is attainable, a loss that you know, okay, you're ready to risk. That is what I go. I speak to people. I go into the markets risking 10 pips, 8 pips, 5 pips, 15 pips, 20 pips max, because I know, okay, yeah, I can afford to lose this money. There's something that is sure about Forex markets. Loss is very sure. Loss is like 100% sure. But you said the profit aspect is uncertainty, but it is very certain you are going to incur a loss. So if you have that mindset that, okay, you're going to incur this social loss in the Forex market, then trust me, I think it's going to be easier that way. Then we're talking about loss, talking about defeat. You feel defeated. When you incur too much loss, you feel, okay, you're not getting it. Maybe Forex is not for me. Then you give up. All these things are things, then tension step in. Tension, you start getting tensed. You start looking at your trade. You get scared. You be like, oh God, am I going to get this? Now, I put it to every one of us out there, every one of MTI student out there. There was this mistake I did when I was trading. When I started trading, I told you guys I was relying on signals, and it's really fucked me up. I was in so many Telegram groups. I was in a lot of Telegrams group. I was waiting for them to pay signals before I could trade. Now, if I don't get a signal, I won't trade, and I call myself a trader. It's actually it took my mentality. It gave me a zero. It gave me a zero thought. There was a time around the Queendom trade for like I think 2 weeks or 3 weeks. I did not place one single trade like this. I did not, because I was scared. I wasn't confident about myself. And then there's this thing that happens to people. They tend to find new strategy. These are the negative side of Forex. They tend to find new strategy. You don't need it. You actually don't need to jump from one strategy to another strategy before you can become profitable. You just have to, stick with one strategy. Just one is enough. One strategy, practice and master that strategy. Mastery is everything in Forex. Mastery, just master what you know. You don't have to jump. okay, I got text from people that say, yeah, I think your strategy is what I'll be using. No, you don't need it. The kind of FX strategy is actually good. So many people use the horizontal strategy. I know people that use the horizontal strategy perfectly. I know them. So you don't need to jump from one strategy to another strategy before you become profitable. You actually don't need it. I'm sorry. I think I have a test or something. Okay, so I think the last two is sorry. I think so. The last two is shame. You feel so ashamed. Now this really happened. There was this suggestion that somebody brought in the group, and I was so happy. The person was like, we should try to post our losses so people can know that we also make losses. I really love the idea because there are a lot of people we are actually discouraging with the fact that, okay, we are making profit every day, and the person is like, I'm not making anything. Maybe this is not for me. Maybe, but probably if you start sharing our losses, everybody will be like, okay, yeah, this person makes also losses today, and it can actually, get over it tomorrow. Then we have revenge trading too. We have revenge trading. All these are the negative sides. If you can balance these two sides with your positive and your negativity, if you could make your positivity more than your negativity, then trust me, you become balanced in the forex trade. All this are psychology. This are psychology. This plays with your mind, plays with your mindset. So all these things are what I fought. It wasn't easy. I won't lie to you. There are days that when I take losses, I can't just, I just feel so down that I don't feel like breathing anymore because I feel, nah, how can they survive? I lost all my savings, like all my savings. You should imagine how that felt. I still alone. You should imagine how I felt, starting from the scratch. So I just feel people should actually take all this into consideration because these are things that really help you. I want to, you can just jot this down or you can screenshot. I really want to close it so we can move on to the next thing, please. Okay, yeah, okay, so I'll be cleaning this now. Now, now when we talk about structure, my strategy, the strategy I use is called structure. All right, structure. I mastered structure. I mastered support and resistance. And I mastered the Queen of Pips strategy also because, you know, making use of the Queen of Pips strategy, you have to know how to use your moving average. You have to know how to identify your moving average to identify those pivot zones. Do you understand? Now, if you can identify those pivot zones, it's the same thing as identifying your what, your support and your resistance. That is what I do. Do you understand? So there's nothing special about the strategy I'm using. This strategy, everybody at one point in time actually knows about structure. There's nobody that doesn't know about structure. When I joined the Master Traders Institute, the Queen was actually talking about structure when she was mentioning the breakout and the retest. It's just simple. So there's nothing different I'm doing. There's no magic I'm doing. It's just mastery. Do you understand? It's just mastery and patience. Um, I'm sorry. Let me close this. Let me close this. I'm sorry. I'm not the. Sorry. Let me just. I don't really know how to go about this, bro. Okay, stop sharing. Okay, so I'm sorry, ma. I'm so sorry. I'm so sorry. I'm so sorry. Greed, yeah, sorry. Okay, I'm just getting the question, please. Greed is negative. Yeah, greed is negative. Greed is negative. But to some aspects, greed can also be considered as positivity. Yeah, because there are some trades you take. Now, it's not that greed is actually moving you. It's that you're trying to what, chase higher higher targets. Now you're chasing higher targets and you're trying to what, maintain your risk. Do you understand? I have TP1 and TP2 in every of my trades. TP1 is an easy accessible and take profit that I could easily get. Then TP2 is something that I know, okay, if it's reversed against me, yeah, I can actually adjust and hold the trade. So I'll be talking about structure now, and I'll be sharing I'll be sharing the whiteboard one more time. Now structure. Now when we're talking about structure, we're talking about trends. We're talking about structure, we're talking about trends. We're talking about trends, high and lows. We're talking about high and lows. We're talking about, okay, high and lows. We're talking about lower highs, higher highs, and so on. Then we're talking about trends, which is we're talking about the bearish trends and bullish trends. Now, these are things you actually take into place when you're talking about structure. Now, structure actually is the foundation. I would say that structure is the foundation of a market, like of a price in the market. In the market, structure is actually the foundation of a market. Like you can't actually every strategy, every candle formation, everything actually is based on structure. You can't escape the fact. Now I have a trend, I have a formula. It's just like when you're building, okay, like you're building. Now if you're building, you have to have a foundation. Now the foundation is what we call the structure. Now after the foundation, you can have everything you want to have inside. Oh, you can have everything you want to have inside. I'm coming. Sorry, I'm coming. But firstly, we have to know we have what? A foundation. Now, after the foundation, we can have, okay, maybe you want to put other things into place. You want to put, yeah, your QPO, your Queen of Pips strategy. You want to put your QPO FX strategy. You want to put your candle formation. Sorry, I'm not the tech type, so just like the Queen. Sorry, I'm trying to undo this. Okay, I'm sorry guys, I'm trying to undo this. Okay, so you have okay, what other strategy do you use? You have let's say your support and resistance, your S and R, support and resistance. Now these are like the pillars of trade. These are like the pillars of trade. Everything stands on what? Everything stands on structure. You have to have a structure. Let's look for a different way to get this out. Let me see if I can undo this. Okay, let's look for a different way to get this out. Okay, I'm trying to write a support and resistance. Let me see if I can get. Okay, we have our heads are and how. I'm sorry, guys. We have our S and R, and we have our. We didn't have any issues with this, but this is just what I really need to draw out for you to understand what I'm talking about. Now you might have your, now these are mine actually. So you can have your candle formation. Let's just put it as CF, candle formation. You can have your candle formation. These are what I actually take into place when I'm trying to enter my market, when I'm trying to take trades. These are what I actually take into place. The structure is my foundation, and this, what I'm listing out here, are my pillars. Okay, actually these are what I actually take into place before taking my trades. Now, even having all of this, you can still end up losing a trade. Having all of this doesn't necessarily give you the assurance of winning a trade. You can still lose a trade even after having all of this. I'm sorry. You can still end up losing a trade even after having all of this. So we have let me see, we have, okay, we have sorry, please, pardon my pillars actually. Okay, now we have I have my moving average. There's a lot too. I have my trend lines. I'll make use of TL for trend line. I place in my own trade. Then the last, I'll be making use of MA. That's our moving. Everything. These are the things I actually put in. I actually hold in certain eye perspective when I'm actually taking my trade. So I would know what to do. Do you understand? If all of this doesn't align with my trade, I won't take the trade. Sorry, the message line is blinking. Let me see if I have a message. Okay. I don't really know how to check the message, but I think, okay, I'll just check it. I'll just do that later. So this is what I'm trying to say. Now, when we're talking about structure deals with trends, higher low, lower low, higher highs. Then it deals with either the market is on what? Bearish trend or on a bullish trend. Do you understand? And when we're talking about structure is the foundation of price. It's the foundation. You can't escape it, no matter how. If you're using the Queen of Pips strategy, if you're using the horizontal strategy, there's always going to be a structure you have to take into place. That is what I get to understand. Now, I take all of this in place. I mastered my support and resistance. I mastered my structure. I mastered my candle formation, my trend lines before I could place trades. Now, I'm going to be giving examples of how structure works. I'm going to be giving example and showing you how it works. So you can actually screenshot this. I'm cleaning it now. I'm cleaning it now. So, okay. Now, withdraw. Okay. Now, all right. So now talking about the structure can work in all time frame. You can work in a 4 hours time frame. You can work in a daily time frame, weekly time frames. You can work on your 1 hour time frame, your 15 minutes. Actually, I use the weekly, the daily, then my 4 hours, 1 hour and 15 minutes. That's what I use to place my trades. So if you have a resistance, okay, let's say you're on the bullish trend. You're on a bullish trend. You have something like this. On a bullish trend, coming on a bullish trend. Sorry. Someone is writing on the screen, please. Okay. You're on a bullish trend and I'm so sorry. I'm having issues with this. I'm coming, please. I think my distance is misbehaving now. Okay, I'll be using this.
Matt, maybe you can show us on a live chat so it will be a bit easy for you. Is that better?
Yeah, Ma, I really need to show you what I mean on the white screen board then before I move you to the live chat, Ma.
All right, that's okay. That's okay.
So if you have something like this, you're on an uptrend, and there is a resistance you are looking up to have a rejection. Probably the resistance is somewhere around here. Now, probably the resistance is somewhere around here, and you're looking for a breakout. Now, this is how it works. Now, if you're looking for a breakout of this resistance and you have this, you wouldn't be buying at this zone just because it broke out. That is what I'm trying to explain to you. You wouldn't be buying at this zone just because it broke out. You're going to be waiting to see how the market would react to this zone. Sorry. You're going to be waiting to see how the market will react to this zone. Okay. Sorry, you're going to wait to see how the market will react to this zone. Now, if there is a rejection around this zone, fine, you can take your buy perfectly from here. But if there is no rejection, you're going to wait to see if the market will form a new higher low before taking your buy. Now, I would come again one more time. I'll come again one more time. I think I know how to get the drawing again. Now, this is it. It is very easy to understand. Now, if you are, okay, let's say probably you're on an uptrend and you have something like this. You have something like this. And the market is moving. Sorry. Okay. I think there should be a way I can just continue with that without clicking on this. Should be a way I can do that. I'm sorry, please. I actually need to. It's something. If you don't understand the because if I start making use of the word higher highs, higher lows, most of us will understand what higher highs and higher lows are. I'm trying to make sure I actually make you understand them before I take you to a live chat. So please just pardon me. And okay, fine. And I'm expecting a breakout. Okay. Now, for example, if I was actually waiting for a breakout of a resistance around here and it broke out, I wouldn't be buying this market because it just broke out. I wouldn't be doing that because immediately it broke out, it might not necessarily mean, yeah, it's broke out of structure. It's not how it works. If a market breaks out of the market, if a price breaks out of the resistance or support, you should actually wait for the market to either come back for a retest. Now, if it comes back for a retest, the first resistance, you have to wait for what price will do to it. Do you understand? You have to wait for how price will actually react to it. Now, if price actually comes here and reacts with a closure of a week or something, then you can actually take your buy. But price might not necessarily break out of structure. Price might only break out of resistance and also wants to test the structure back. That is why structure deals with patience. It deals with patience. That was why I was able to get over 800 pips in my last GBP trade. It deals with a lot of patience. Now, there's a difference between breaking out of, okay, yeah, there's a difference between breaking out of a trend line and breaking out of a structure. Likewise, there's a difference between breaking out of a resistance and breaking out of a structure. They are two different things. Now, price might actually react to this to this resistance and buys up. Yeah, wait for the reaction. Wait for the reaction. That is the key word. You wait. You do a lot of waiting. You have to wait. You just have to wait. Now, if this reaction tends to old market, yeah, price will bounce up. But if it doesn't, you wait for price to form a new higher low. Yeah. A new higher low here, then confidently take your buy with your stop loss and and everything. You even have a good risk to reward. Sorry. Sorry. you understand? You even have a good risk to reward with a few stop loss, okay, with a few pips stop loss. Now, please, I really want to take a quick question. Like, I just want to take a quick question from the group before I move in on to the next thing, before I start showing you the charts and everything. Please just, send me those questions. Let me understand what you really want so I can just go back to it. I'm sorry about my graph, my lines and everything. Just show me, just ask me those questions. Let me know where you're not getting it so I can just come back again to do it over again. Okay, can I turn off the candles? Whiteboard. It's lagging now. Okay, the phone is okay. Okay, all right. I'll do that. All right, please just send in your questions. Please. I want to know. I want to know if you're really getting it, please. Is structure the same as structure is more like price action because price action actually deals with studying of the market movements and everything. Yeah, you can actually say that, yeah, sure. But in structure, you just have to wait for the market to actually breaks out and retest that particular breakout before you actually take your trade. CF means candle formation. Okay. Mom said I should go on because of time. Okay. All right. Okay. I will just show you some other things. Okay. So I'm going to share you my screen now and see. I'm sharing the screen now. All right. So first of all, I hope everybody can see my screen. This is GBP JPY, and we're looking at the charts now on GBP JPY. This is a weekly time frame. And I'm going to be teaching you how to identify your support. Everybody actually knows how to identify support and resistance in weekly time frame. So now this is how I place my own trade. I actually wait for confirmation. I do a lot of waiting. Now, the first resistance I actually pinpointed here was this zone because I noticed there was a lot of liquidity around this area. There was a lot of buying and selling around this area, in which price actually broke out from and retested. Now, in that retest zone, price actually went straight up. Do you understand? And I actually pinpointed the next zone, which is what? The next resistance zone in which rejected price. I actually called this sell last 2 weeks or so. I actually called that sell last 2 weeks. So now I'll be showing you how to trade using the support and resistance and using the structure. Now, presently now I'm waiting for a breakout of this zone in a daily chart. I'm waiting for a breakout, either a breakout, upside breakout, or a breakout below before making any decision on the market. Now, but in our 4 hours zone, this is what I'm talking about when I'm talking about structure. Now, we'll actually be making use of this. Okay, I'll be teaching you this first. Now we can see in this is the ranging market, right? We can see this is a ranging market. But in this ranging market, there's a lot of buying and selling there. There's a lot of pips that are meant to be caught in there. I trade ranging market, so I trade breakouts in ranging market. You can see this is the 67 pips. You can have a lot of pips in it. Now, in this ranging market, if you look at our smaller time frames, we see market opportunities in it. Market opportunities in it. Market opportunities. Now, first of all, let us identify our breakout here. We have a breakout here, this zone here. There's a breakout here. Now, I'll show you the breakout in the smaller time. You can't actually understand it now, but when I show you in the smaller time frame, you would understand. Now, let's go to 15 minutes. There's a structure here that broke out. There's a structure around this zone that broke out. They gave us this huge sale and give us it's a chance of entry. Now, let's check our 15 minutes. Now, this is what I'm talking about. Now, you can see in this market, what did you say? You say a ranging market that kept going up and down, then the breakouts. Now, in this breakouts, I'm expecting, if I'm going to be taking this trade, I'll be expecting price using my structure, a simple breakout and retest strategy with no no nothing on. I'm expecting price to what? To come back to this zone, to test this zone. So I have my entry. I'm waiting for price to come back and test this zone before I can have my sell entry. Do you understand? Now, this zone, price, unfortunately, the price didn't get to this zone before it actually turned back. And I would have actually missed out of that trade because I actually wait for price to get to my zone before I enter. I don't jump into market. I don't do FOMO. I don't just jump into the market. I actually wait. So now pricing comes to me, so I leave the market. But this is just an example of what breakout and retest. No matter how price breaks, okay, it still comes back to test that zone. Now, it doesn't happen in there are some trades that you see that price will even come and test your zone and still end up hitting your stop loss, going up again to form another higher high. Do you understand? But this is how trading works. Now, let's look for another breakout and retest. Then we'll look for another entry zone. Okay, now, this is another one. We have our what? Our breakout here. We have the first one here. Our price broke out from this zone, broke out, give us this little moves, but I would have actually waited for, I would have had my entry here, in which price actually came back to what? Test. Now, this is a good sell. You can see, now price tested this part and gave me a whole whooping 62, 66 pips. Do you understand? Those are the structures you just need to take notes. You just have to calm down and look for that. Structures don't just happen all the time. You understand? That is why I mastered my support and resistance to and actually take some trades if I want to without even waiting for structures. But when you see structure, you should just take the most of it. Do you understand? Now take a look about notice the line. Okay, the break of the structure. Notice how price are actually what? Notice how price are reacting to it. Now, same thing happened. I would have actually entered this trade because I saw a lot of rejection wicks there. I would have actually taken this trade and have my stop loss, my take profit around this zone, which eventually didn't get there, but I would have actually left the trade or put my stop loss at break even. Do you understand? Now, this we continue. This is the breakout also. We have this structure here. This structure was broken. Now this structure was broken and we have a chance of entry. You have a chance of what? Entry at this zone. You take your sell, you have a whole lot of pips to yourself. Sorry? Take your sell and you have a whole lot of pips to yourself. Do you understand? Now you can see that this zone that are big structure zone that are breaking out and be testing actually holds. There's something happening there. Like there's something really happening there for all markets to keep testing it and rejecting immediately. Till we had a breakout here, and this is where the market ended last week. So we had a breakout here. Now this breakout is what I'm looking for. I'm looking for either price, come back to retest this zone here. Either price come back to test this zone. I see price reaction to this zone, then I probably take my buy. Or price head up to this zone, then reject and comes downward. Either ways, I'm actually looking for a breakout of this total zone before I would consider taking a trade tomorrow morning. So I'll be waiting a lot. I'll be doing a lot of waiting. That is what structure do for you. You have to wait. You just have to wait. Because if you keep jumping into trades, you keep losing your money. Sometimes I don't take trades for 2 days, 3 days, 4 days. You understand? Just to get that perfect entry. Now, I got this entry on my 4 hours last week. Now, this is what happened. Now, you can notice in this, there was a breakout. Like as P-Boy, P-Boy in the group said, he was expecting market to buy. When expecting market to buy, price will test all. I wasn't expecting market because I was just waiting for the weakness. of the buy, because I think on our day on our weekly chart, that was like the second time or the third time it was testing that zone. So I wasn't expecting a buy. So I was waiting for a break of the weakness how I caught over 100 pips, more than 100 pips, sorry, last 2 weeks or 3 weeks. Now, at this zone, I was studying the market, and at this zone here, on the 1 hour, I saw a lot of wicks. I saw a lot of wicks on the 1 hour. There was a lot of wicks on the 1 hour, and it shows that the sellers are getting the buyers are getting very, very weak, and the sellers are going to come into place. Now, look at where structure take in. Look at how I got my perfect entry on this market. This is one of my best markets. Like I caught more than 100 pips. I caught over 200 pips. Like this is not back testing. This is real trade. I caught over 200 pips. Now, this is what happened. This is on the 1 hour. Notice this on the 1 hour. There was a lot of wicks. Sellers are starting to get in. I was waiting for 2-3 candles, which I got, but I didn't enter because I was waiting for a breakout of the structure, because there was a structure that I was waiting for the breakout. Now the structure is here, and on the 15 minutes, that was where I got my entry. Now on the 15 minutes, this is how the structure is like. It's very, very beautiful. I'm like to you. This is how I got my entry. Now on the 15 minutes, it broke out. Look at it. Now on 15 minutes, the market broke out. Then I had my entry. The market retested. It broke out. We tested the structure. Then I had my entry. I entered the market at this zone, and I did over. You can just check it out. More than 100 pips. I actually did more than. I did almost 160 or so. I did almost 160, and I just left the market, feeling fully achieved because I waited for that trade. I waited a lot for that trade. So now that is how structure works. You don't really have to make anything much more complicated to yourself. You just have to wait for a breakout of structure. Then you have to enter the market. Now I use okay, talking about trends. If I'm trading using structure, talking about trends, I trade using what? The higher highs, the higher lows on the bullish market, and I trade using the lower highs and the lower lows on the bearish market. Now, if time permits, I could actually explain that as well. But I would like to talk about USD. Okay, now, basically now, the analysis for GBP/JPY for this week is I'll be waiting for a breakout of this zone before I could get my entry. I'm waiting for a breakout of this zone. This zone I highlighted. Though I'll be looking for a reaction here. I'll be looking for a reaction here on my 4 hours because there's liquidity here. I'm looking for a reaction here. So waiting for what price to get to this point. See if price would reject. If price rejects, I will be taking myself down to this place. If price doesn't reject, I will wait for price to break out from this zone, then break out, totally break out, not a false breakout, then retest, then I take my buy all the way up. That is how it works. So that is my analysis for GBP/JPY. Starting from tomorrow, just watch out for the breakout. Watch out for the breakout. Watch out for the breakout. And watch out for the reaction at this zone before you can take any trade. Before you can consider placing a trade. Now let's go back to okay. I think I have a trade on USD card. I have a trade on USD card. Now USD card. This is trend line. I would like to say something about trend line to every one of us so we can understand trend line more perfectly. Now, breakout in trend line, the breakout in trend line actually means different things. Now, there can be a breakout of trend line and not a breakout of structure. These are two different things. There can be a breakout of trend line and not a breakout of structure. Most people, they expect a breakout of trend line. And when a trend line breaks out, they wait for a retest and they buy. And the trend line end up selling. The market ends up selling and they'll be like, there's manipulation in this market. No, there's nothing like manipulation. It's just that you didn't take note of the structure. The structure is still in place. The structure is still in place. If there is a breakout of a trend line, make sure it's a breakout of a trend line and a breakout of a structure. If price might break out of a trend line and not break out of a structure, and that's when you see price going back to test to create a new higher low, and you'll be like, what is wrong? Now, okay, yeah. Now, yeah, there's this breakout. There are few breaks out, and you feel like, okay, maybe this market is going to buy, and and market just end up coming down. It means what the structure is still intact. The structure is still intact. Now, I don't trade USD card. I don't trade any other pairs except from GBP, JPY. But I was working on this. I've been working on it for the past few weeks now. And when market was right here, I was waiting for a sell around the space because of the liquidity. Market hasn't broken out yet. It was very obvious that there was not a breakout of trend line yet. So it's just there was not a breakout of structure yet. So it's just a breakout of trend line. So I was expecting the market to react to this, and eventually market got there and gave us a few rejections and sold. Now, so if I was in this trade, my entry would have been here. I would have targeted this place because this is like the next support. I would have targeted the place and waited for what market to react to that zone before I can know if I will be leaving my trade to come to this place, to come to this to the demand zone. Now, I got in a discussion with, I think, Konzi. I think that was last week also, and I was like, this market is going to sell. I'm expecting to sell. And he said he was expecting to buy. And I said, okay, yeah, it's two different things. I'm expecting a breakout and a retest. I'm expecting to sell. Now, this entry I had here, the market was at this zone. The market was at this zone when I put this entry there. Because I know the liquidity here would have a huge effect on them. I didn't take this trade too because I wasn't in the trade. Okay, I don't trade USD card. Now, this zone I drew here, the liquidity still holds. That is why this market rejected immediately it touched the zone. It rejected, like immediately it touched the liquidity zone, it rejected. Now, liquidity means a place where there's a lot of buying and selling at the same time. You understand? So it rejected. So now, at this zone, this was where I had my entry. This was where I had my entry. I think I took the trade on my demo. I was like, okay, let me take this trade on my demo. I was waiting for market to sell because I was like, okay, I'm expecting a breakout. I'm expecting a breakout and retest. Now, this is what happened. Now, most people always take their sell from here, from this zone. They're guessing. So let me just put my So please, if a market doesn't break out and you're taking yourself, you're guessing. You're guessing. There's a difference between knowing what to trade and guessing. That is what I make my people know, like my friends, my trading friends. I made them know if there is not a breakout of a market structure, you're guessing. If you're selling or you're buying, you're guessing. Now, I think most of my friends actually took the trade from here, and probably they had much more profit than me. Yeah, probably they had much more profit than me. But I was comfortable with my trade when the market was broke out and retested my zone. And this was where I had my entry. Market broke out of this structure. This structure here, you can see the structure here, broke out, did a few pips, then came back to retest my zone. And I had my what? And I had my entry, yeah, at the week. And I had my entry at the week. And market did a few pips for me, I think 40 something pips that day. Did a few pips. I think 48 pips or 46 pips that day. Then before the rejection, before this rejection here. Before this rejection at this zone. Now, you know, when you're trading, you have to take note of each support and resistance and how price will react to them when it gets there. Those are the things you have to take note of. The price actually reacts to every support it gets to. It's either it breaks support or it's either the support actually returns it back. So now take note of my entry now. Now I took the sell from here. Price did 48 pips for me, then rejected. I got out of the trade around here. When I saw the closure of this candle, I got out of the trade. Because I noticed probably the support is very strong. I got out of the trade. Now, price went back from here. Please take note of this. Price went back from here, broke my, I was out of the trade already. then came back to do what? A new higher high. Price came back to do a new higher high here. I wasn't in the trade. I was waiting for what would happen. I wasn't in the trade at all. I was waiting for what would happen. Then price was sold. Now came back here, tested this zone again and rejected. Now check out the price in 4 hours. Now this is what we have in 4 hours. After my entry, price did a few pips, rejected, came back up, made a new higher high, came back, then rejected at this zone, at this support tone resistance zone. This is the other candle I'm looking at now. So I'll be looking at what would happen on Monday if price would actually break above this resistance and form a new higher high, or form a new or form a new higher high. Or probably if price would reject again and come back to test our demand zone here, which was my proposed TP. Now, all these are what you have to take into consideration when you're. So I have a message. Let me check the message. Okay, I should talk about my stop loss. Okay, all right, I'll talk about my stop loss. Now, my stop loss is actually the most interesting part of my trade. Sorry. Ma, please, okay, thank you, ma'am. Now, my stop loss is actually the most interesting part of my trade. Like, I deal with my stop loss. I have a good risk management mentality. I don't risk much. I don't risk much. Now, this trade, I had I think I had 7 or 9 pip stop loss. 10. I think 7 or 9, sure. And 7 or 9 pip stop loss. If I'm swing trading on the 4 hours or on the weekly hours, I use 20 to 30 pips. That is when I know, okay, I want to chase like a 200 pips. I use 20 pips. But on a normal trade, I'm chasing 60, 80, 100 pips. I use 10 pips. Sometimes my best risk to reward was I think 3 or 4 pips. That was my best risk. Like it was 4 pips, and the trade did over 3 or 4% for me that day before I exited the trade. So, for example, let me show you how I use my stop loss in this kind of a scenario. Now, when price broke out in the 15 minutes, price broke out from here in the 15 minutes, and we tested here. Now, this is 15 minutes. Now, when price tested here, I would have my short position here and my stop loss around the zone. Now, why I'm using this zone is because there are movement of price reaction here. I'll be looking forward to see if price would actually get here with just how many pips? Just 7 pips stop loss here. This is 7 pips stop loss. That is how I work. I would look for a price reaction to this zone, because I'm not expecting price to actually get to this zone again. Now, peradventure price gets to this zone and it's my stop loss and stop me out. I would wait and wait for price for a new higher high. Now, if price stops me out at this zone, I'll wait for price to form a new higher high at this zone here. This would be where I would be waiting for my new entry. Because we have a structure here. This structure here, and price might want to come form a new structure for me here. And this will be where I will have my sell limit again with a little pips of less than 10 pips. I would have my sell limit here, and I will have my stop loss just here. That is just above this. That is a little above this structure here. So that is how I do my trading. That is how I work my trading. That is how I actually perfected my my trading. So I don't go with I don't enter my market with a big yield. I stack a lot. I actually stack a lot. I can stack up to 2 trades or up to 4, 5, 6 entries. I have 6 positions. I could open 6 positions. Now, if I'm using take note of my stop loss. If I'm using 0.50, I'm risking $50. If I'm chasing 10 pips, I'm risking $15. Now, if I open 5 positions, $50 times 5, that's $250. Now, if I'm risking 10 pips, I'll make sure I'm chasing a bit, something like 60 pips, 50 pips maximum, minimum. 50 pips maximum, 60 pips. Now, if my trade should come my way, 50 pips in six like 50 pips. Chasing 0.50 using 0.50, 60 pips is like I think $300. Now check $300 in 6 positions compared to what I'm risking. So that is how I go about my trade. So I know what I'm risking. I know how much I'm risking. I calculate my stop loss. I don't just go into the market. Some people just they enter the market. They enter, maybe they enter their shots and they be like, okay, let me put my stop loss here. They guess. Now there's a difference between guessing and actually knowing where to put your stop loss. There's a difference between just guessing, okay, price can't come to this place, let me put my stop loss. That's why most of the time you find yourself, you find yourself looking at your trade, getting scared. Okay, what about if price loses it's my stop loss? What would happen to me? No, you don't. When you, as a trader, you should actually know your calculated risk and actually know how price, even if price gets to that stop loss, how you're going to cope with it, how you're going to handle it. You shouldn't be scared about the fact that if price is my stop loss, how would I feel? You shouldn't risk more than you can afford. On each and every single trade, you shouldn't risk more than you can afford. You should have a minimum risk for a maximum profit. So I okay. So on my on USD card, I would expect price to actually. I would love to see what price would do. So this resistance here, and see how price will react to the resistance here before I can know what to say. But left to me, if price should reject here, then I'll be probably looking for a breakout of this zone here. If price rejects here and head to this place, I'll wait for a breakout here, then a retest, and I can actually have myself. Now, this is basically structure. I don't know if time will permit me. I would love to talk about how to trade using higher lows and higher highs.
No, we can do that some other time.
Okay, ma. I'm so sorry.
Yes. So you can just round up, and we have our guest, our super guest in the house.
Okay. All right.
Yeah.
Okay.
So you can just round up why he said one or two things to everyone here.
Okay,
yeah.
A big thank you to Sadon Jazzy for giving me this opportunity, and a big thank you to all my MTI students. Like it's a honor for me to just talk to you guys, because you guys are great. You guys, I look up to you guys a lot. I look up to you guys a lot, and looking up to the Queen of Peep is the one thing I actually admire. Like she's like a small girl to me, and I really appreciate this opportunity to even have the chance to talk to you guys. I'm talking to more than 38 people here. I really feel blessed, like talking to you and even having a special guest in this meeting. I really feel blessed and really appreciate you guys a lot. And that's
thank you. Thank you very much, Matt. I really learned a few things from you today. I'm really impressed because Queen of Peeps have been telling me about you for some time now, and I was like, okay, it would be nice to come watch you in your element. And I really appreciate. I like when I see young people, taking time to learn something for themselves, to feed both themselves and their family. I really appreciate it. I'm still going to meet you and we'll still learn some more. Like I'm still learning every day. Queen of Peeps teach me the one that she can teach me. You teach me the one that you can teach me. At the end of the day, for all of us, to be chopping. Nice one.
I really want to thank you. I want to thank you too, sir, because actually I met the Queen of Peeps through you, sir, because you actually tweeted about her, and I was able to connect with her.
Mado, nice one. Please, what's your Twitter handle so that I can follow back?
Okay, Matt Dharey, sir.
Okay, the same thing. Okay, fine, no problem.
Thank
you very much. Thank you very much.
Thank you so much.
And everybody that took their time to tune in today, please, thank you very much for tuning in, and please continue to support. To tune in more times. You never know. Even if it's one thing, even if it's just support and resistance, you learn today. Tomorrow come and learn trend line. Next tomorrow come and learn higher high or higher low. Don't be taking it small one by one. Before you know it, like a guru on your own. Thank you very much, everybody, for coming through.
Thank you, sir. Thank you so much.
One.
Thank you very much, Don Baba J. I really appreciate it.
All
You
right, God bless.
actually, this is an inspiration for every young person on this call, that to see a celebrity appreciate their work and be on the same call. Some people is like a dream come true. To me, it's like a dream come true. And I really appreciate everyone. I appreciate you, Matt. I'm really, really super proud of you.
Thank
You've
you so much.
actually, you actually make my dream come true, that yes, what I'm doing to impact life is actually working. So if I can see so many of other people like you come on board and do the same thing you're doing, grow the account and be disciplined. I always say it every time on the call, discipline is the key thing when it comes to trading. If you can kill your greed, you can become anything. I always say it, if you can make $1, you can make $1 million. All you need to do is what? Discipline. So I'm super excited. Thank you, everyone. There's some questions here. Matt, you can go through the chat box and
Okay.
sorry about that. I muted myself. You can go through the chat box and you
Okay.
can take your time to answer everyone.
Okay, so
That
I'm seeing a
yeah.
question here right now. What time frame is best to use to trade structures? Every time frame is okay for structures. Every like you can use the weekly time frame, you can use the daily time frame, the monthly, the 15 minutes, the 1 minute, the 1 minute. Yeah, you can trade structure using the 1 minute time frame. Everything is applicable to it. So is that okay? If price, are you saying if price makes a higher low after breakout? Is that valid for long? If price makes a higher low after breakout, you actually need to wait for a retest. You don't have to go into the trade. Like this is what I'm saying. That was why I was trying to explain to you using the line graph. Okay. If price breaks above the resistance or price breaks above below your support, you just don't get into the trade just like that because price broke above it. Then you understand? Then buy up. You don't wait for a retest. At that resistance zone, see how price at that resistance zone, fine. Wait for price to what make a higher low, then get your buy entry from that higher low. It will give you a very good risk to reward. You will be risking just few pips. Trust me. You'll be risking few pips and you'll be chasing a real big, huge profit. Okay, how do I set the support and resistance on my M24? Uh, Support and resistance on my M24. Okay, I think you're new here. Support and resistance on M24. You don't really have to set it. You just have to identify it out. It's not something you set. Show 1 hour time to guys for the test of the breakouts, 15 minutes of 30. Yeah, there's one more thing I need to chip in, guys. This question says, if there's a breakout of structure on 1 hour time frame, can I spot retest of the breakout retest entry to have a good entry into a breakout a structure like to have a good entry into breakout and retest? You have to make sure 1 hour breakouts there's a breakout on the 1 hour and the smaller time frame. For example, there's a breakout on the 15 minutes as well as there's a breakout on the 1 minute. Trust me, if you can have 15 minutes, 30 minutes, 1 minute, your probability of winning that trade is high. I'm saying it again. If there's a breakout of structure on 3 to 4 time frames, your probability of winning that trade is very high. If you have a breakout and a retest on 5 minutes, yeah, you can have a breakout and retest on 5 minutes and you still end up losing the trade. But if you have a breakout and retest on 1 hour, 2 hour, 3 hour, 4 hour, 5 hour, 6 hour, 7 hour, 8 hour, 9 hour, 10 hour, 11 hour, 12 hour, 13 hour, 14 hour, 15 hour, 16 hour, 17 hour, 18 hour, 19 hour, 20 hour, 21 hour, 22 hour, 23 hour, 24 hour, 25 hour, 26 hour, 27 hour, 28 hour, 29 hour, 30 hour, 31 hour, 32 hour, 33 hour, 34 hour, 35 hour, 36 hour, 37 hour, 38 hour, 39 hour, 40 hour, 41 hour, 42 hour, 43 hour, 44 hour, 45 hour, 46 hour, 47 hour, 48 hour, 49 hour, 50 hour, 51 hour, 52 hour, 53 hour, 54 hour, 55 hour, 56 hour, 57 hour, 58 hour, 59 hour, 60 hour, 61 hour, 62 hour, 63 hour, 64 hour, on the 15 minutes. Once you have that, a breakout of test, and you take your trade, a sell or a buy, trust me, you have a high probability of winning that trade. And okay, I think, okay, what does CF mean? I mean, CF, I told you CF means candle formation, just candle formation. It means all of the strategy you're trying to take in place, and how you're trying to put them all together to, go into the market.